Welcome to XM.com for today's Daily Market Comment by Mario Sajigiriakos. I'm Cristina Marujos. There was no shortage of volatility in the FX complex on Friday. While the latest batch of U.S. employment data was strong on the surface, with non-farm payrolls exceeding projections and wage growth firing up, there were some dark spots as well, and the dollar could not capitalize for long. There was a dichotomy between the payroll and household surveys, with the former pointing to a booming labor market, whereas the latter revealed job losses, putting traders on high alert. The conflicting signals meant this report was unlikely to move the needle for the Fed. As for the dollar, it's still too early to envision a bearish trend reversal despite the latest retreat. Historically speaking, a softer Fed profile is not enough to turn the tide in the dollar. It also requires an improving economic outlook in the rest of the world. Therefore, while leading indicators suggest the United States is heading towards a recession, it might need a few more quarters to reach that stage, making any reversal in the dollar seem like a story for the second half of next year. There was a similar reversal on Wall Street, which recouped some heavy losses to finish nearly unchanged. Equity markets have come a long way in the last couple of months. The S&P 500 has rallied some 16% off its lows, with cooler U.S. inflation data and hopes of a more cautious Fed serving as fuel for the advance. Nonetheless, it is difficult to trust this recovery as the fundamentals haven't really changed. Oil prices are trading higher on Monday, even though OPEC did not ride to the rescue by slashing its production. There is also an element of hesitation in energy markets, with several key players taking the sidelines to observe how the EU ban on Russian crude and the $60 per barrel price cap of the G7 nations will impact prices. All the buzz in the markets today is about some Chinese cities relaxing COVID restrictions. While these are minor steps, investors clearly view them as the blueprint towards a full reopening in the world's second largest economy, judging by the 4% rally in Hong Kong equities. As always, what happens in China will be crucial for the Australian dollar. The Reserve Bank of Australia will meet overnight, and although market pricing is leaning towards a quarter-point rate increase, it also assigns a 25% chance for no changes at all. This was a Daily Market Comment at XM.com. Have a great week.